Hello and welcome to my channel, The Day Tradester. This is a channel where I show people who are thinking about getting into the markets or are new to the markets by opening a retirement account, or they are trying to day trade and they're not profitable. And by showing what I do on a daily basis through my trading practices as primarily an investor and a trader second, that they too might be able to change their future and create wealth over time. And no matter how you see your financial future, no matter how much you have in retirement, whether you have some or not, and whether you think you have enough for retirement, I hope that I can help you see your future through different lenses. So starting off with trades that I made within my $25 a week account that I opened up yesterday. I funded it with $25 and I made my first trade, bought 3 shares of Silvercore Metals Incorporated. And we were looking today to see if there was a chance that we actually would be able to sell and make a profit. And the reason I'm trying to make a profit on that is I found that basically trading the S&P 500 as new investors, it's much safer and equally more profitable. And the least expensive ETF that is indexed to the S&P 500 is TWOX. That is an accelerated outcome ETF for the S&P 500. And right now to get that is $26.56 per share. But going back to SVM, stock that I purchased at 3 shares at $6.29, and it's only gone up a penny for right now. It'd only be 3 cents per share. So we're significantly down from that $26.55 goal. Of course, significant is relative depending on how much money you have to work with. For people who don't have a retirement account or who just opened up a brand new account and all they have is $25, $1.50 is a lot of money. And for those who have just opened up a brand new account who are interested in my performance within the $25 a week account, that is it. I'm done. I funded it yesterday. We bought 3 shares of Silver Metals Corporation. It's not risen enough for me to sell to buy into the S&P 500 using an ETF. So for my $25 a week account, I am done and finished for the day. All right, so now I want to switch over to my other account, and we want to go back to S&P 500, the index. And we can see that the S&P 500 is making a small bounce back from the drop yesterday. So that is a little bit of relief for today. Hopefully it turns into a longer run of relief. All right, now for our sell list, I did receive 2 alerts today. And the first one I'm going to take a look at is the ETF SMH. And the alert, I believe, is for the, let's see, SMH. We want to expand this chart. I had price fell below the slow moving average to 329 and 8 cents on the 3-day chart. And I'm going to go ahead and sell 1 share or 2 shares. I will be able to sell 2 at a profit. And I'm selling now because I've changed my strategy and I'm using several more time frames than I used to use. I used to just use 1 time frame and use a 10 and 20 cross, both either up or down to buy and sell out of a stock. But I found that even though that will be profitable over time as an investor, I can maximize and increase my profits using larger time frame in conjunction with the daily time frame. And if I wait on a 3-day chart for the fast-moving average to cross down below and be confirmed as a move below the slow-moving average the next day, it's possible that the price will be lower than my purchase price because I was purchasing on different time frames. So just in case this is going to be a longer downtrend, I'm going to go ahead and sell 2 shares. So I need my active trader. We're going to scoot this back a little bit. There we go. All right, so I haven't updated this, so we're going to just go ahead and cancel the active trader, and I'm going to come into my watch list, right click using the Thinkorswim platform. We're looking to sell 2 shares at 327.83. And from 327.95 that I sold at, I bought at 295. So we're looking at roughly $32 per share. So that's $64 in realized gains. And the second stock that I received an alert on is SoFi, S-O-F-I. It's an online bank. And we had price fall down below the slow moving average. And this is again on the new 3-day time frame. And for the same reason that my buying and selling pattern was a little bit more frequent using the strictly only the daily time frame, I don't want to wait until this the fast moving average crosses below the slow moving average. It might drop down enough to where I won't be able to make profits. It'll take a while to average all of the stock purchases that I made on the using only the 10 and 20 cross on the daily time frame to spread a little bit more evenly through the multiple time frames that I'm now using. Now with SoFi, I currently have 54 shares and I max out at 72. So that's 18 shares for each book. So I will be able to sell 18 shares at a profit. So we're looking to sell 18 at a current profit from $25.34. I bought those at $14.08. So that is 11 cents profit per share. So we're looking at roughly just shy of $2. So $2 of profit and realized gains makes it 66 realized gains so far for selling of those shares. Now I do have some stocks that I want to take a look at to see where they are. Let's expand back out to my 4 charts. And I'm going to expand this cell, the daily chart. And I want to take a look at some stocks from my previous day's activities that I did not sell. So JP Morgan, I'm going to take a look at them. I guess I might as well just stay on the 3-day chart. Expand back out to here, go to my 3-day chart because it's going to be the same thing. Price is moving and I don't want to miss the opportunity to sell something at a profit. So maximize the sell. So we're looking back at JP Morgan. So the current price is $297.78 and that is already lower than my purchase price. So I'm not going to do anything with JP Morgan. Cross that off the list. The next one is Toast, and actually Toast is the same thing. I won't be able to sell that at a profit. So I'll take a look at my list and come back into an active video. And that way I don't waste time and you just have to watch me checking to see if I have anything to sell. All right, the first one I found is QQQ. That's an ETF for the NASDAQ 100, and I'm looking to sell 1 share. I currently have 3. When I'm maxed out, I max out with 4 shares. It's 1 share for each book. So I'm looking to sell 1 share at the current price, $5.92. And what I'm selling, I bought at $579, so $13 and realized gains on that sale. Another stock I could take a look at from the previous weeks. This is from, or previous days. This is from Wednesday's list, is Micron, MU. And for the same reason, this is a 3-day chart again. If you've watched my videos before, I only used 1 time frame. And if you followed me and maybe you possibly copied or was thinking about copying some of my trades, you would see that we were losing the opportunity to increase our wealth faster as an investor and a swing trader because I was buying and selling too frequently. So using multiple charts, that will slow the buying and selling down, which will increase the overall profits and realized gains as we move through our investments over time. And we had price move down today below the fast moving average, but again, this is the 3-day chart and it's going to take some time to level and average back out. So I will not be following in the short term very hard and a static rule set. And just in case Micron goes down further, I do not want to risk again losing the potential for gains. So I'm going to sell when I max out with Micron. I max out at 8 shares, and it's 2 shares for each book. So I'm going to sell 1 book, and 1 book is 2 shares. So I'm looking to sell 2 shares at $209. And what I purchased was $181. So that's roughly $18 realized gains per share, so $36. And Micron is the last stock that I have to look at on the sell side. And that's it on the sell side. There are no stocks going to earnings. It's Friday, very, very few stocks. It's extremely rare for a stock to go to earnings on Friday afternoon, nor do I have any stocks going to earnings on Monday morning. We're looking at the visualize of the heat map for the day. Here we've got a lot of green, you saw the candle on the daily chart. We got a rebound, bounce back from yesterday's drop, mostly green. Oracle is apparently, it looks like it's the worst performing stock of the day within the S&P 500. This heat map is specifically the heat map for the S&P 500 stocks. But going back to the calendar, we're going to look at Monday and only all account positions. You can see nothing is happening on Monday or Tuesday morning. We have John Deere going to earnings on Wednesday morning, but that's the only morning there are any stocks that I actually own. And here are the few that are going to earnings next week in the afternoon. So we'll address that next week. So going back to the chart, I do have some stocks that we might be able to purchase. So looking at GCT, GCT is GigaCloud technology. I'm going to go back to my 4 charts that I'm now using. You can see on the daily chart, if you're able to see this. If you can't see this, let me know. We crossed on the daily, but I'm no longer just using this to buy and sell. I've now incorporated a 3-day chart, a monthly chart, and a quarterly chart. You can see on the quarterly chart, we had a cross back last year, and it went into a small downturn on the quarterly time frame, but then it bounced back. And on the monthly time frame, let me zoom in here. You can see that you might be able to possibly see that we currently this month we forced the fast moving average to cross above the slow moving average. And for GigaCloud Technologies, that's a pretty good move. You can see they had earnings, and on their earnings, they were expected the forecast of 65 cents per share, but they actually had $1.16 per share of overall gains. So that's been good news. So now, instead of just buying and selling on the daily cross, I'm using all of these time frames, mainly the monthly time frame, the 3-day time frame, and the daily time frame. And now that all 4 time frames are in an uptrend, I want to be able to max out my allotted shares that I have for GigaCloud. And the current price of GigaCloud is $34.73. I round that up to $35, and at $35, I want to max out at 20 shares. All right, so my current shares of GigaCloud, let's see, DEFG, GCT. I currently have no shares of GigaCloud. I have been day trading it today, but everything I've bought, I've been able to sell at a profit. So one way to pull up the sale order is to right click the price. I'm looking to buy. Well, that did not pull up the purchase order. I guess I could just do that 5 more times, but we're going to go ahead and come down here. I can't get to the order, so maximize this. That's still not allowing me to pull up the order ticket. Let me drop this down. That's not working. Bring this down. Nope, I can't get to the extra space to add a company. All right, you're seeing me work through a situation that I've not come across. So let's see, we're looking to, actually, we're not going to be selling. We're going to be buying a particular stock. So we want to expand that out, drop this back down, and we'll fill this in here. I'm looking to purchase GigaCloud Technologies. So now I should be able to right click. There we go, pulls up my sale order or my order ticket. And I'm looking to purchase 20 shares of GigaCloud at $34.75. And now we are fully accounted for GigaCloud at 5 shares for each book. Another stock I want to take a look at is Ross Stores. Go back out to our four charts. I'm going to type in ROST for Ross Stores. And if you're able to see, we can see all 4 charts are now in an uptrend. So I'm no longer just using the daily chart. There were times when I bought only specifically on the daily chart, and the 3-day chart might have been, the fast moving average might have been lower than the slow moving average, or on the monthly chart, the same thing, fast moving average might have been below the slow moving average, and I bought in, and it wasn't a great opportunity because price eventually turned right back around and went down. I didn't realize that price was in an overall downtrend. Like I said, and if you've seen my earlier videos, I'm just a guy. I'm just an average guy. I am making money mainly because I'm acting as an investor, but I am making a little bit more money than the S&P 500 because I am swing trading. And again, if I figure if I can make money, then I can just make some videos to help other people who either do not have an account, retirement account, or they're not profitable with their current account, that if I can do it, they could do it. If you're new to the videos and you're new to the markets, that bell was the end of day. It's now 4 o'clock Eastern Standard Time. And that is when the New York Stock Exchange closes. Now, currently with Ross Stores, I currently have 2 shares. And we just had earnings. Go in and maximize this sell on the daily time frame. See, we just had earnings, or Ross just had earnings, and they have gone from 162 to 174. That's a $12 move. And I don't know if you are able to see, and by all of the charts, Ross does not really move a great deal. So this is a 5-year chart here. So in 5 years, they've gone from $124 to $174. They've only gone up $50. So to have a $12 move, that would be a little risky for me to max out up to 4 shares. With Ross Stores, I max out at 4 shares. The reason it would be risky, if you look, that is a huge candle of the last 3 months. And if you look at the same thing on the this chart, if we look back, you can see this is one of the largest candles out of the last 5 years. So it's quite possible that this is the top and price might slowly drop. So I'm going to wait for a better opportunity to buy back in to Ross Stores. So I'm going to look at the next stock that we might be able to purchase, and that's Walmart. Walmart recently had earnings. They had a great earnings. Let me expand this. But let's look at all the charts. You can see Walmart has been on a run for the last 10 years, quarter after quarter after quarter. Almost every quarter is up. They have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Basically 10 quarters out of the last 10 years that they were down. All the other quarters they've been up, which is a really good sign. And we also have the burgeoning economic situation right now with the tariffs probably affecting the current prices here in the economy. So Walmart's probably going to continue to do well. We also have price moving up on the monthly chart. We have price move back up above the slow moving average and the fast moving average. And within the last 3 days, they had earnings and they had a blowout earnings. So you can see where you might not be able to see. Let me maximize this cell. So they had earnings, they had a blowout earnings, and they had especially a blowout forecast for the rest of this year and going into 2026. You can say they went from $99 all the way up to $108. So they had a $10 move, but they've dropped back down $3. Looking at our daily chart, just bear with me. You can see that they've come back down. So this might be a great opportunity to buy back into Walmart to make sure I'm maxed out. So with Walmart, I currently have 18 shares, and with Walmart, I max out at, where is it? 24 shares. So I can purchase 6 more shares. That's 6 shares for each book. So I'm going to purchase 6 more shares. I'm buying 6, pump this up to 6. Current price $105.58. Confirm and send. And now I'm maxed out with 24 shares for Walmart. I might even consider adding another 4 shares just to increase it to 28 shares instead of 24. We just saw that out of 10 years, they've had basically only 10 quarters that were down. I mean, out of 10 years, that's only 2.5 years that they were down. And they weren't down 2 quarters in a row. So that's also good news. So I'll think about that. Maybe that's something you might want to consider, purchasing Walmart. It looks to be a very steady and slow compounding stock. But again, don't take my advice. None of this I'm giving you is advice. I'm just showing you my thought process, how I trade, and you should do your own research. I'm not a financial expert. I'm not a financial advisor. Do your own research and make your own decisions. But you certainly can use the information I'm providing as a content creator here on YouTube, showing you my trades and my trading strategy within 2 portfolios now. One portfolio being the $25 a week portfolio that I just funded yesterday and we bought the first stocks in, and the current portfolio that I've been trading for almost 2 years, and I've been mostly profitable the entire time. Again, if I could do it with my tiny little man brain, I'm sure you could do it as well. And another stock that we received a possible buy alert on today is Yum Brand Foods, YUM. So going back out, well, you can see that they had a cross several weeks ago. They had a pretty good earnings, and they had a nice big move today. You can see this is a pretty volatile stock. Up, down, up, down, up, down, up, down. Well, not down yet, and hopefully we won't be going down for a while. But let's go ahead and I'm going to take a look at all 4 charts. So you can see that on the quarterly we're up, on the monthly we're up above the slow moving average, and on the 3-day, within the past 3 days, we just crossed above the slow moving average. If you can't see that, I'll maximize this cell. This is the 3-day chart. So you can see in 1 year and 3 days, that's what this chart is. It's a 1 year and 3-day chart. They basically have been moving sideways since June 20th. They basically have gone nowhere, and they're actually lower than their high. So let's take a look at Yum Brand Foods on the larger time frames. So even though they've basically been moving sideways for the last 3 months on the daily chart, and for the last year, they're actually lower than their high, but quarter after quarter after quarter over 10 years, they are on an overall upward trend. Now, taking a closer look at each of these charts, especially the monthly chart, let's go ahead and take a closer look. I'm going to maximize the monthly chart. Almost every time that they've had a move on the monthly chart, they went down shortly afterwards. Another big move up, and they went down. Big move up, moves down, big move up, move down, big move up. They really didn't go anywhere for 3 months. We had a somewhat of a big move up, and then went back down. And again, these candles are monthly candles. So every time we had a month that was up, we ended up with at least 1 month. The next month, it fell back down. Or in this case, we went up, so the next month was lower, and we continued down. So since, even if we take the biggest move here, which was back in February, we ended up moving down overall 1, 2, 3, and then 4 and 5 months, ending at a recent low of 137 from almost 157. So a $20 lower in a matter of 1, 2, 3, 4, 5, 6, 7, 8 months. So we're going to apply history. Again, if I was just using the daily chart like I used to, I would be buying in. I'd be buying in because price went above and moved above the fast moving average. But as I've been buying Yum Brands, it hasn't worked to my benefit. I ended up buying in, and then price would change direction on me, and price would stay down for quite a while, as you just saw. Being transferred, and sorry about the pause there, being transferred, and that is a rotation. It appears that right now a lot of money is being rotated out of tech stocks and going into the health sector, because for the past several years the health sector has not done much. So it looks like it might be starting the beginning of a smaller bull run within the larger bull run of the economy, that the health sector might be taking off. Now, currently, I have 4 shares, and when I'm maxed out with Edwards Life Sciences, I would like to have, well, I'm maxed out with, no, I would have 8 shares for Edwards Life Sciences. I would max out at 8. That would be 2 shares for each book. So let's go ahead and take a look at the quarterly chart. I'm going to maximize this cell. And even the quarterly chart looks good. We are basically on the 5th month of an upward trend in the movement of the stock. We had 2 previous months where price looks like it did cross the fast moving average, even though the fast moving average is lower than the slow moving average. This still might be a good movement for the stock price. Now, I am going to use some of the rules from that I had with strictly the daily chart, and when the fast moving average was lower than the slow moving average, that was a signal for me not to buy back in. Since I already have 4 shares of Edwards Life Sciences, I'll keep those 4 shares, but I'm going to wait either until price moves above and moves and closes above the slow moving average, or I may even wait until we actually have the fast moving average cross back above the slow moving average. Just because we have price moving up now doesn't mean it's going to continue that way. Typically, when you have a fast moving average cross in either direction below the slow moving average, even on the daily chart, it may move that direction for several days or weeks. Now, in this particular case, we're looking at quarters. So we're looking at 2 years that after it crossed 2 years ago, it stayed down. and that I don't want to go 2 years holding bags. As I said in previous videos, if you've seen, I'm basically becoming a better trader every day, every week. I'm not an expert by any means. I'm just a regular guy who is learning how to trade, and every day I'm learning to be a little bit more profitable. And this is one way that will help me be profitable. Buying stocks when on almost any of the time frames when the fast moving average is lower than the slow moving average is typically not a great idea. So I'll maximize this back out. And the last stock I'm going to take a look at is Akami, AKAM. And we have, if you can see this, we've got two charts where the price is fast moving average is above the slow moving average, but on the other two charts, both on the quarterly and the monthly price, the fast moving average is lower on both charts than the slow moving average. So whatever I have in Akami, I think I only have one share. I currently have one. I'm just going to hold on to that one. I'll keep day trading that one particular share. Actually, I won't be day trading it because I purchased that at $101.94. So I bought that way back here sometime. That would have been around January 21st of this year before price moved down. Now on January 21st, let's take a look where it was a year ago on January 21st. I shouldn't have bought. So back then, up until recently, I was only using one time frame, and I've been profitable using just one time frame, but incorporating the rule set that I had, when fast moving average is below the slow moving average, I do not buy stocks even if price is moving up. But now that I'm using larger time frames to confirm whether I should be buying a stock, we have a year ago, the fast moving average was lower than the slow moving average. And several months ago, I found this on the weekly and the 3-day time frame, and I started incorporating that. I would use the 3-day time frame to confirm this, and I wouldn't, or excuse me, it was a monthly. I found the monthly time frame several months ago, and I started utilizing that as part of my strategy, that if I had an opportunity to buy with price on the daily time frame, I would confirm to make sure price, the fast moving average, was above the slow moving average. It is not in this case, and neither is it above on the quarterly, so I'm not going to be purchasing that. And had I been using these larger time frames a year ago, I would not have purchased this at $101. And since I'm acting as an investor and not a true day trader, I will hold the bags. I do not want to sell stocks at a loss. And since I'm buying large cap quality companies, eventually the price of almost every stock I have eventually more than likely will go back up, and we will ultimately at some point be able to sell these stocks at a profit. So that's it for my activities, both the buying and the selling on this account. And we saw what I was thinking about doing on the $25 a week account. Hopefully some of what I went over today makes a little bit of sense. I know it might be confusing. I'm still learning it as well. This is only my second day using all 4 of these charts to make trading decisions. If there's something that you didn't understand, go ahead and leave a comment. I'll do my best to answer that question. I do have the intention 2 weeks ago, 3 weeks ago, and 4 weeks ago, each weekend I wanted to make videos explaining my strategy, explaining my process. I'm kind of glad that I did not make the video explaining my strategy using strictly only the daily time frame, because I realized just a couple weeks ago that was not the best way to increase or compound our profits. So maybe this weekend I'll get up off of my rear from doing something else and make the explanatory videos now that I'm a little bit more comfortable that I actually have an even more profitable strategy that will not only keep me a little bit more sane, but it will also keep some of you if you incorporate my strategy, or even if you copy some of my trades. And with everything being done, we'll go ahead and just take a look at the S&P 500 chart. Going to maximize the sell. Look at the SPX. See where we ended up for the day. We'll zoom in here. You can see, well, we had we went up substantially and came down quite a bit, but we still ended up better and higher than the open. Now, I do have a zone already put on here earlier Let's see if we can drag this all the way over. Oops, went off screen. So what we're doing is setting a zone. This area is a zone in which price will possibly fall down into and bounce off of the lower portion of this zone possibly. And the way we find zones, we find areas in which there was consolidation or their prices bounced off of an area and then went back down, or it went down and bounced off and came back up. Let's expand this out. That's fully. For example, if you look, we've got 1, 2, 3, 4, 5, 6, count this 7, 8, 9, 10. This area here, if we look at this line, this horizontal line across here, we're looking at 8 areas in which price bounced off of or went down to. And here's another 2 more. So this is how you find zones or areas in which there was a lot of price action, whether buying or selling, and the next zone is down here. So we went 1, 2, 3 days later, or 3 days prior, before we get to our next area in which we had a lot of activity where there was buying and selling. So this area here with all of this price action would be a zone of resistance. So if we were to draw a box up here, it's possible over sometime next week that price might rise up to this zone and then bounce back off. But here we have another zone first. So if we were to draw a box here, let's go ahead and add a drawing. And we just added this box here. This is a rough area. This is how you find your zones. Zones of resistance, zones of support. A zone of support can become a zone of resistance, and the opposite, a zone of resistance can become a zone of support. And zone of support and resistance are where price action will bounce from, either to go back up or to go back down. So it's quite possibly next week that we might see price come up into this zone, maybe bounce off of here before heading back down, or quite the opposite, it can go down and then bounce back up. And if you're new to trading and you've heard the term breakout, but you're not sure what a breakout is when it breaks through a zone of high activity. So if price does go up and bounces off and comes back up and bounces off and then eventually breaks through, that's a breakout. Same thing on the downside. So let's take a look at the SPY, SP 500 on all 4 charts. Hopefully you can see all 4 charts. You can see that the only one that is down and below the slow moving average is the daily chart. The 3-day may end up crossing next week. If I would need to maximize this sell. It might actually make it through and break down next week and fall below the slow moving average. Time will tell. But we clearly are still in an uptrend. We have prices still above the fast moving average on the monthly chart and definitely on the quarterly chart. Over time, I'm pretty much going to decide, I think I'm already there, that the quarterly chart really isn't all that helpful in determining whether or not short-term buying and selling is going to work in our favor. That might be just too large of a time frame, other than finding out which side of the slow-moving average the fast-moving average is. So let's go ahead and review what I did for the day. So I sold SMH, SoFi, QQQ, and Micron Technologies, not Micro. And I purchased GCT, GigaCloud Technologies, and purchased Walmart. If you don't own any of these stocks of the GigaCloud and Walmart, you might want to do a little research and take a look at that. Same thing with selling. If you own some of these and you haven't seen the charts that show the actual price action of these individual stocks, do a little bit more research and make a decision on whether you want to continue to hold these or sell them for the short term. The purpose of selling in the short term is hopefully that when as price continues to fall, we'll be able to buy back in at a lower price. That is the plan, is to buy back in. Every time I sell a stock, I look forward to repurchasing that stock at a lower price. So now we'll take a look at the hour chart of the day. expand back out, maximize this cell, and it is GCT, GigaCloud Technologies. And they, if we take a look at this candle, they had a huge run today, capturing an all-time high. GigaCloud Technology, they are a business-to-business e-commerce site. They primarily hook up the Asian manufacturers with merchandise providers, sellers in the United States and Europe. And again, if you haven't taken a look at GigaCloud Technology, you might want to take a look and make a decision outside of just what I am doing. You're more than welcome to copy my trades. Just be aware and know that I'm not an expert, and my trades are based just primarily on price action within the given 4 charts of the quarterly, the monthly, the 3-day, and the 1-day. And you can see that all 4 are in an uptrend, and we recently just had the a monthly time frame move above the slow moving average, which that in itself is a good signal. From my own observations and research, more than 80%, even up to 85% of the time, out of all the stocks that I own for the research that I've completed or at least done, whenever the monthly time frame of the fast moving average crosses either above or below the slow moving average, whichever direction it goes, it tends to continue in that direction for quite a while. So as it's going up, we can take advantage and increase our wealth and our portfolio balance. And if it's on the downside, we could sell out and protect the drop in our portfolio. But again, do your own research and make up your own decisions. I'm only showing you this to show you that I'm making money, and it's a little bit more complicated system. It was a very simple system up until a few days ago when I implemented these 3 other charts. But all in all, it's still a basic, simple system. So now it's time to take a look at my performance for not just the day, but for the week. Both realized gains and portfolio balance. Well, not the portfolio balance, but the portfolio performance compared to the S&P 500. And here we go. For the day, my realized gains for the day was $402.14. And that's on a cost basis of a little over $46,000 and 109 trades today. If you're new to my videos, and you're not aware, I also day trade in this account. I am not trying to teach you day trading. I just want to show you how to invest primarily and also swing trade to try to maximize the earnings potential, the overall wealth creation, and to compound your portfolio balance more quickly than just buy and hold or dollar cost averaging into the S&P 500 index. So just realize that most of my gains today are from day trading. That is true on most days. There are days where I make more money from my swing trades that I have in the videos than from day trading, but that is rare. If we look for the week, I made $846 for the week. Now, in both cases, I ended up making more because Charles Schwab, they account the sales differently than I do. I only sell stocks at a profit. I do not sell stocks at a loss. And the way Charles Schwab is, I had one of 2 choices, first in, first out, or last in, first out. And I chose last in, first out. So I made more than $400 today. And I also made more than $846 for the week. But we will take Charles Schwab's accounting for the final numbers. And I made the $846 for the week on a trade of 216 trades, using almost $93,000 as an original cost basis. All right, the portfolio performance. So you can see that I was actually doing quite well. I'm still doing well. I'm still outperforming the S&P 500. But one of the reasons that I wanted to find a better system, a better strategy, is to prevent holding bags as long as I've been holding them. By buying and selling too quickly on the daily chart, I would buy in, price would turn, and I would be holding the bags until price turned back around. And that is what helps me see a greater decline than the S&P 500. It's the same thing that helps me see a greater increase because I have individual stocks over the S&P 500, but it also is the reason that I have a greater decline. But with the new strategy of taking a little bit more consideration and taking a little bit more time to think about the potential buy or sell opportunities based more on 3 additional charts as opposed to just one chart, I should be selling out sooner. And when I do sell, when price does move down, I should be able to sell more stocks at a profit. Thereby, it will reduce the steepness of our decline, of my decline. It will also reduce the steepness of your decline, potentially, if you incorporate this system as well into your strategy. At any rate, my current performance year to date since opening this account around August 20th is I'm performing at 0.31% compared to the S&P 500 at 2.56%. However, all of the assets that are in this account were transferred from an older account that I closed on the same day that I opened this one, and I was performing at 16.26% compared to the S&P 500 at 10.54, which total combined, my account is at 16.57% compared to the S&P 500 at 13.1%. That means I am outperforming still, even with this steep decline, the S&P 500 by 3.47%. Now, for those of you who I'm actually trying to reach, which are people who are thinking about entering the markets, or those who just opened up a new account and they're not sure where they want to invest, I opened an account back on in mid-March, and that was where I began just putting in $25 a week, believing that $25 a week can change your life over time. And you can see that every step, every week, each step is a week, and that's where I put in $25. You can see here I had a zero balance. So beginning with zero balance, putting in $25 every week up until incurring this week the last contribution of $25. I have a current balance of $1,042.87. Now, of that entire balance, I have $128.01 in realized gains. So my realized gains in this account, I do day trade in this account. I day trade all S&P 500 stocks. That's the only thing that I'm buying in this account. And I needed to do this practice. I needed to run this test to see if it was actually doable. That way I have some proof of what I'm saying when I'm trying to help inspire people who do not have retirement accounts or believe that they don't have enough money to put into a retirement account, that where it would end up producing anything over time. That is the purpose of this test, to see if just investing in the S&P 500 and doing a swing trading strategy in that as well would actually be productive. But I have over 10% in overall gains, of realized gains in that account. And to show you that I am only purchasing S&P 500 stocks, these are all of the S&P 500 ETFs that I purchase and sell on a daily basis. Now, since the account is less than $25,000, I cannot buy and sell the same stock on the same day. And that is the reason that many people who are just getting into day trading fail. They do not know that at first that they're not allowed to do that. You are not allowed to buy and sell a stock on the same day in a margin account. You would need more than $25,000. Now, you could do that in a cash account. However, in a cash account, you have to wait until the next day until your funds settle in order to buy new stocks. If you run out of money, you run out of money. But in a margin account, if you run out of money, you could just always borrow money from the broker. But you just can't buy and sell the same stock on the same day, or sell and buy the same stock on the same day, for risk of violating the pattern day trading rule. At any rate, every single one of these are an ETF that is indexed to the S&P 500. That is all that I'm trading in this $25 account, and that is all I plan on doing in the next $25 account that I just started yesterday. However, the first stock that I bought was Silver Metals Corporation. And I did that just to have some potential of earning a little bit of money before next week when I put in $25. And I'm going to put $25 in every Tuesday. And every Tuesday, I'll be making some type of S&P 500 ETF trade. But so far this year, this is all of the stocks I currently own. Now, there are more ETFs. There are definitely more ETFs that use that are indexed to the S&P 500, and I will utilize them as I can, as I buy and sell stocks. So here is the return. Now the return, just this account, again, starting in mid-March with $0, my current performance in this account is 23.77%. As you can see, let's expand this out. I have a less of a decline in this account compared to my larger portfolio, and also compared to the S&P 500. So I've been running a very slow, gradual incline compared to the S&P 500, with a few declines narrowing the gap. But however, on this gap, I've been able to sell out sooner of several S&P 500 stocks or ETFs, thereby holding a little bit more cash during the downturn. So you can see the gap has widened in this particular downturn compared to other downturns. So I've incorporated a strategy that I was utilizing in here, unknowingly using in this, and incorporated it in my larger portfolio where I do the swing trading. But as a new trader, as Warren Buffett says, just invest in the S&P 500. That's not my advice. That's Warren Buffett's advice. And over time, you will do just fine. So again, I'm performing at 23.77% compared to 14.35%. And my portfolio performance, I'm blowing away the performance in my other portfolio where I do a lot more work. In my other account that's larger, I think I have nearly 10,000 trades for the year in that account so far. But comparatively speaking, I am absolutely blowing away the performance in this account because I've only had 229 trades. And I'm performing at almost 23.5%. So over time, I may find out that financially, just trading the S&P 500 is far better than owning over 200 stocks and day trading those. And if that ends up being true, then I will slowly incorporate trading more S&P 500 stocks and working a little bit less and making more money, because that is the overall goal of what I want to achieve, is to maximize the amount of potential for gains, reduce the amount of work, and also do it with less risk. So there's my performance for both accounts. Hopefully this weekend I'll make a little bit more information and description and explanation videos on what I'm doing and why I started, and we'll see if that happens. I hope I do. But for that, I'm done for the day, and I hope you have an absolutely amazing rest of your day and have an awesome weekend. Thank you very much. And please, if you made it this far in the video, then you probably got something out of it, and other people might as well. Please like, share, and subscribe. Help me get in front of other people to help them be able to see their future through different lenses.